I'm going to show you my personal tax strategy setup for a high income earner. My name is Dan, and what we do right now is we help tax professionals, CPAs, EAs at tax planning. Recently, I just got feedback from the one who's making Tax Maverick for us and creating all this. His name is George. He gave me feedback that this year alone, we helped high income earners mitigate $150 million of income through tax strategies. And so what we did last month is $650,000 cash collected. This month, we're already pretty close to about $200,000 cash collected. We're on pace to hit either 600 or 750, somewhere in that range. We're going to try to fall very close to that. But the reason why I do these videos is to connect with more people, to document what I'm doing, why I'm doing it, at the time we're doing it, and just to kind of consolidate thoughts in a place where I just want to kind of give feedback. The way I think about it is kind of almost like a vlog of my thoughts. And so hope this benefits for you guys. I will give you guys insights before I show you my tax strategy. I do have these books here, Marketing Machine Playbook by Alex Ramosi. And I have some more of these books. I have actually a bunch of these books, and um, I got some of these books here. So I got the $100 million playbook. So if you guys want more of these money models books, just comment book. I'll send it over to you. But as we were, let's get into my tax strategy. Now, I confirmed this with some of our tax strategists just to showcase if this was right or wrong. I went through them and I asked them, is this a good feedback loop? Is this a good tax strategy? And in the words of my amazing CEO, David, he said, you want to look rich to the banks and broke to the IRS. And I think that's so amazing. So what I'm going to do is I'm going to kind of just share my screen and share my thoughts. And I could be wrong, honestly, but this is what my counsel right now is telling me. Could be wrong. Again, if I need to fix it, I'll fix it. But this is kind of how my strategies kind of lays out to be right now. All right. So let me go ahead and share my screen. So this is my tax strategy currently as it stands. All right. So, and these are some things that I'm hoping to get some ideas on. These are some things that I already kind of know. And the reason why I'm sharing this with you guys is just so you guys can kind of see how this works based on the current. Let me see if I can turn off this camera. Move that. There we go. And then let me move this. There we go. So this is kind of the way I look at it now. So on the top here is earned income, right? Earned income. Now for me, I have just really one main source of income here. And then I do have a little STR, which is a short-term rental, which is I have a little Airbnb. And then I have some MRR from affiliate stuff that I've done back in the day. And so I have some MRR coming in from those things over there. And so the main driver here is that the main company pays me, well, it pays me through LLC, and that LLC is set up as an S corp. Now, rule of thumb, even if you're a high income W-2 earner, now you might want to talk with some of our strategists. We have a lot of strategists. The greatest thing about being where I'm at in this place of creating revenue for tax strategists is that I get to see a lot of strategists, and so I can get real-time feedback from the highest net worth creators on the planet. And so it's really cool. So kind of rule of thumb here is usually if you're have your own business, you want to be set up through an LLC. Now, what I found out is that W-2 employees can also be set up as an LLC or 1099, and it's actually beneficial for the employer because they save self-employment tax. That's really important. So if you're if you want to set this structure up and you're a high income W-2 earner, now again, you need to consult with your tax strategist, but from what I understand is that you can create you can be on a 1099, and what you want to do is you want to create an LLC, right, under your business, and that LLC, I set it up as an S corporation. I don't even know what that means, to be honest with you, but I was just told to do it, so I did it. And the S Corp, what it does is it becomes like a business now. And what this does for me is it allows me to save my own self-employment tax. So the business pays me to the LLC. Now the LLC is set up in a way where I'm an employee of this business. All right. I'm an employee of that little business right there. That little LLC employs me, Dan. Right. So I am my own different entity from the business itself. And so the S corp right there allows me to take a W-2, right? And they call that reasonable comp right here. So that reasonable compensation, that's where I come up with the W-2. Now you can just chat GBT, what is reasonable comp and how do I set one up for myself, based on who I am and whatnot. And what this does is the income goes into this LLC here, right? And then over here, I push business expenses. So now that could be lease payments, right? Lease payments, right? That could be business. This could be business marketing. This could be all things that, whatever you can write off. These are, what the typical write-off stuff is. Section 179, right? Which is a big vehicle, buy a big vehicle, 6,000 pounds. This is why you see a lot of people buy 6,000 pound cars and stuff like that. You can use that there. And all these are business expenses to lower your taxable income. So a taxable income is basically, let's say I make $100,000, right? And what we're trying to do with these expenses is I want to take this earned income and I want to take it down to, I want to show the IRS that I'm only making $45,000. And the way I do that is by expensing some of these things or using some tax strategy. Now, in this case, the S Corp is a tax strategy because I get to pay myself through a W-2 through my LLC. So I know it's a little complex, but that's kind of how the structure is for me. Then the W-2. Now, this is kind of a little bit tricky here. And this took me a while to understand. So then what happens is when I get my payment as a W-2 employee, let's say I'm a small little business, tiny little business, and I pay myself a reasonable compensation of $30,000 to $50,000, which means I'm only taxed on, instead of being taxed on $100,000, I'm only taxed on $35,000, right? And so that changes my tax bracket, right? That there, if you get nothing else from this, that was probably a key portion for you guys to set up an S corp if you're on an LLC or 1099. Now again, I'm not nearly as qualified to talk about this. I'm just showing you what the advisors have told me, and so I'm just kind of giving you my best insights on these things. But again, the best place to go is to say if you want help, I could probably, and you guys make at least $100,000 to $200,000 or more. Maybe I can get you connected with one of our advisors and they can give you some advice or some thoughts on it. They might ask for like a testimony to give them or something like that. But nonetheless, like the idea here is to know the game so you know how to play, which I mean, just learning tax strategy. Oh my gosh, it's the unlock that unlocks everything. When you learn tax strategy, that's the only thing wealthy people talk about is how do I lower my taxable income so that I can take more home or build more wealth with it? Because the last thing you want to do is pay more to the IRS. What do they do with it? You don't know. So the best place that your money could be is with yourself or in vehicles that you trust that can grow and compound. Which brings me to the last point here is once I got that, I put a little bit of money into what we call Roth IRA. Now, a Roth IRA for me, it's just a little play. It's kind of like a little second bank. Now, the cool thing about a Roth that I think about, this is after tax income. Now, the reason why I can't go from here to here is because this Roth is after tax income. Okay. And so that's a kind of an important key there. All right. After tax income. Okay. And this Roth right here grows on average. And I never knew the power of compound until I started leveraging myself and I have my little Roth account. I'm like, whoa, it is growing like roughly 8 to 10% per year. Now, again, I don't know this to be true. I'm just seeing my Wealthfront. I use Wealthfront. Some people use Fidelity. I'm just seeing my account. I'm like, wait a minute, is that real money? So I never really knew this compounding game until I started using things like this. I tried it with Bitcoin, but with Bitcoin, I think I figured out the trick is every time I invest in Bitcoin, the value goes down. And every time I take money out of Bitcoin, the value goes up. So, I don't know where to go from there. So, anyways, on this one's a little bit more for me, it's a little safer bet for this Roth IRA, right? So it goes about 8 to 10%. So let's say 700, $7,000 a year you invest in it, right? After taxes. It's just a little wealth vehicle. It's nothing gonna really radically transform your life. It's not gonna transform your life, but it's gonna give you a little bit of tax-free income down the road, for down the road when you guys are this is different than a 401k, because I think this one you self-fund and the 401k it's funded by your employer or something like that. But let's say it's 10%. So you get $700 in year one, right? And then the year two, it's 7 times 0.1. And that now becomes, I don't know, like 770, right? Now you earned an extra, whatever, $770, $770 instead of that. And then it just starts compounding year over year, right? And in like a couple years, it grows bigger. Now, the reason why I really set up these tax strategies things is because, I want my son to not have to worry about um, finances. And better yet, I want to teach him the financial game that I didn't know. And I'm learning this from all these tax strategists, and I'm learning these things. And again, I'm doing this video, so maybe someday he'll look back and say, "Oh, this is what my dad did. This is what he was looking at. This is what he was trying to do at the time." Right? And it's almost like a little lesson bank for me. One thing I wish my dad would have done is document himself more often. And I heard Patrick Bet David talk about this, and he said, the reason why I do so much content is so my kids can go back and say and listen to me and hear my voice and hear what I'm thinking and hear how I'm talking, right? And that's one of the things that I really stuck home with me. And so that same thing here, there's a strategy inside the IRS code that says you can pay your kids or pay your children up to, I think this year, 2025, $15,000 of income, untaxable income. Very, very important. Meaning after $15,000, and I think that's less than 17. Now, again, you have to look up these things. But you can pay someone or not someone, one of your kids that's under 15 under 17. I think that's the number. And you can pay them up to $15,000 this year untaxable. What that means is when technically what you want to think about is, let's say over here, okay, just to make it easy, let's say over here at the top we got $100,000, right? And that goes down to what we call the LLC, right? We take that to the LLC. And over here, we're going to do this little business strategy. And now we have ourselves, we pay our kids, right? Pay kid or child $15,000 of wages. Now they don't have to get a 1099 for this if it's below than $15,000 is what I was told. So what that means is now I have $85,000 left over, right? And then I take myself over here and I say business expenses, it's $50,000. So now all I have left is I have left $35,000 for Dan's account. Now it might not look like a lot, right? It might not look like a lot, and that's okay. You don't want this to be a lot because up here you're taxed. If you just do this, you're taxed at this. But if you go through this strategy, then you're taxed here instead. Okay. And this is untaxed. Again, you have to look at this. You have to look at the rule book to determine if that's true or not true. I'm pretty close to the 15,000. Last time I checked, it was 13.8. Okay. And this is untaxed income right here. Meaning they could take that and not have to submit any documents about it. But you do have to give them like a real role. Like for an example, my son does clean my office. He does do things for the business. Technically, he does do these things, and I do have a log for him. I do give these things for him to do so that he can have an actual job so he can get paid for it, right? And that right there was the game that I was missing so much. And so what I was like, okay, let me and then so that's kind of the play here. So that's really the whole play I'm trying to tell you about. My tax strategy is I'm trying to take this taxable income up here and I'm trying to get only taxed at $35,000 rather than $100,000. See what I mean? So like even 20% up here is $20,000 of taxes. 20% over here, sorry, 20% over here of $35,000 is a totally different ballgame. So $35,000 times 0.2, that's $7,000, right? $7,000 of taxes. That's $14,000. So 20 minus 7, that's $13,000 of tax savings right there, right off the top, right? And that right there is the game. That's the wealthy. This is what the high income earners do. Actually, the wealthy people do. Rich people pay these taxes. Rich people pay this. Wealthy people do this, right? And they make their money in these assets over here. So now let me take you back over here where I was at. Now, the reason why I took you around that kind of roundabout way to get you here is so that you can understand what I was looking through when I was creating this thing for myself and with the council of tax advisors that we have in our network that we help them grow and scale their companies. And naturally, I just ask them a few things because I'm curious all the time. And I'm like, man, I wonder what they're doing. Like, what are they actually seeing or what are they actually using with these super high income earners that, that that need to mitigate their taxes, right? And so from here, let's say it's $13,000, right? Well, what I was talking to one of my advisors, I said, what can I do with this $13,000? Well, they said you can set up what they call a custodial Roth because since my son's less than 18, he can't have his own Roth account. But I could set up a custodial Roth account for him so he can earn um a percentage. Now I have to double check on this thing right here because I don't know if I can actually put money into that um since it's not taxed up here. Again, this is just what I shared this with my advisors and they like this looks good. I haven't fully vetted it, but I do want to share with you kind of like where this is going. And so far, these are all the things that I'm doing. Like there's some other strategies over here for business expenses, like um there's a Augusta Rule, which means I can I can actually I can rent my home to my business for 14 days, right? Then I can also use the STR loophole, the short-term rental loophole, if I wanted to, but I don't think I need to because I will have enough business expenses to lower my tax liability there. And so through these processes here, really the big key here was taking my taxable income of let's say 100 to $500,000, right? Taking that down to a total of 50 to 80,000, maybe less. Maybe even if we can get this down reasonably to 35 to 85K, well, that's the delta here, right? Is tax savings, which means if I could save money on taxes by lowering my taxable income, then I could get tax savings. And that is what you call it's profit because it doesn't go to the IRS who doesn't know how to use your money. It goes back to either a wealth process over here like this, or even like a retirement fund or some type of life insurance, or even there's some other things like cost segregation. There's other things if you have real estate that's really good for tax strategy as far as what I'm learning from my advisors and my wealthy clients. This is what I'm learning from them. And so this is kind of what I'm looking at now for my structure. And I'm just sharing this with you guys as I learn it so you guys can benefit from this. And again, if you guys want more information on these kind of things, just comment taxes or taxes in the comments, and I will see if someone can reach out to you and maybe help you out there. Best case, they'll just kind of point you in the right direction. Worst case, they'll, I don't know, they'll point you in the right direction. But anyways, this is kind of what I'm doing right now to help me lower my taxable income and build not generational wealth, I would say, with the $7,000 a year. It's not going to really compound that much until probably year 20 or so, right? But what's really cool for me is I want this thing right here. I really want this thing right here. I want my son to know that he has some money over here and it's working for him, so that when he becomes, of age, now I can show him the tax strategy and the strategies to protect his wealth. And so that way he never has to worry about finances. He doesn't have to navigate this world of financials because I've kind of paid the path in front of him. Now there's other things like asset protection. There's like trusts and stuff like that that we have to set up. But this right now is good for where I'm at. But eventually, as it gets bigger, it's gonna need some estate planning. It's gonna need some trusts in there, and it's gonna need some additional tax strategies to mitigate the taxes on higher income. So, for an example, if this year I do 250 or 500 or whatever in earned income, and next year it goes to a million or a 1 million, right? Then I'm going to need a different strategy here than I did over here and over here, right? And I'm going to need to make bigger and bigger bets over here so I can mitigate more taxes. And so that's the game, is just getting your earned income up, meaning getting how much you earn up is probably the secret unlock. That was the hardest thing to do, is figure out how to get your income higher. Um, then if you can get your income up, then you can figure out these tax strategies. And the reason why I do this is so I can kind of lean back and say, oh, what was I thinking at the time? And if it benefits someone, great. Otherwise, yeah. Hope this was a helpful video for you. This is kind of what I've been thinking through. I went through a couple of advisors. I asked them if this was a solid strategy. They said, yeah, that's a pretty good solid strategy. Um, and the thing that kind of pulls all this together is a good accounting. And so a good bookkeeper can kind of help you out with this. As far as the labeling of these business expenses, that's pretty important. Like how you label these things is very important. And then how you set up the structure here is very important too. Like this needs its own bank account, right? Its own bank account. This is something I need to make sure I clarify. So the attention media needs its own bank account, and the money has to go into this bank account. And then this W-2 has to go into a different bank account. Not necessarily a different bank account, but do a different account. Can't be in the same one. I can't take from this one into my W-2. I have to take this money and put it into a W-2. And then this over here, let's say hypothetically, even though the bank, the bank that my son gets paid, even though it's my bank, it still has to be his account. It has to be a different account, right? And so that's kind of the thing there that I learned. It can't be in the same one, right? I can't go into here and just dip into it all the time. I can't just grab from here. I have to take these out and put them into their respective buckets so that for accounting purposes, they can keep this thing clean, right? And there's a couple of other things that I haven't implemented yet because it could get really, really confusing very, very quickly. But another thing I'm thinking about creating is what they call a family management company. And that would help me kind of make my just make things a lot more cleaner. So anyways, if you thought this was valuable, like this video, comment below what you think, and yeah, these were helpful. Hope it helps. Peace.